Edward Yardeni with us this morning. He's president of Yardeni Research. Mr. Yardeni, always a pleasure to speak with you on NDTV Profit, and thank you so much for joining us.
Sure.
We have to start by talking about the Trump trade and what US markets, global markets are pricing in. Are we really going to see that kind of a golden age for corporates, for companies, for equity markets in the US under Trump?
I think so. I think that we've been in what I call a roaring 2020 scenario since the beginning of the decade, and this just increases that likelihood. I think even before Trump won, the outlook was really quite optimistic for the U.S. economy because I've been expecting to see productivity-led economic growth, keeping inflation down, increasing profit margins, and allowing wages to rise faster than prices. So all that was happening even before Trump was elected, and I think Trump's election, with a cut in corporate taxes, a cut in several categories of income taxes, and of course deregulation, all add up to a very pro-business, pro-consumer environment. So I think, as they sang in the 1920s, happy days are here again.
Okay. Love the T-shirt, Mr. Yardeni, and good evening to you. I wonder if this continues for a while, because this is arguably one of the narrowest US markets, right, that we've seen in a really long time. So does it broaden or does tech still continue to dominate? Until when does this rah-rah move continue?
Yeah, we've heard that as a criticism of the bull market really since it started in October of 2022. That's when we actually turned bullish at the end of the month. And there was a lot of pessimists and bears saying that it wasn't broad, and if it's not a broad bull market, it's not going to be sustainable. But it has been sustainable. It's certainly been led by the so-called Magnificent Seven, but other stocks have done well. The S&P 493 have done well. What really has been the laggards has been the small cap and mid cap stocks, and those stocks may be very well taking off here on the expectations that they will benefit from lower tax rates. They will benefit from deregulation. So I think the market is already broadening out. We certainly saw that last week.
Okay. 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 So here's the question, because you look at the globe in that way, Mr. Yardeni. The belief earlier was that at some point of time with the rate cut trajectory, money would flow from the US markets into emerging markets, Asia, etc., into other asset classes predominantly. China is not stimulating enough. US is doing very well. You think that flow is on the abeyance for the time being?
Well, I've been recommending what I call stay home versus go global since 2010. So I've actually been recommending overweighting the U.S. in global portfolios for a long time. I guess at some point here, I'm going to overstay my welcome, but it just continues to work. I think there's a lot that the U.S. still has going for it. And I think emerging markets are having some issues here. A relatively weak global economy outside the United States. China's weak, Europe is weak. And so there's still enough weakness to keep commodity prices down. So the commodity producing emerging markets aren't doing very well. And then I think with the interest rates probably not going to drop as much as people had been expecting because the U.S. economy is doing so well. That may also be a problem. The dollar is strong, which is a problem for emerging markets. But as you well know, India has stood out quite significantly. And I think India will continue to stand out among emerging markets.
Mr. Yardeni, just specifically to India and a little more on that, you're saying we're standing out amongst emerging markets, but why is the response to India not stand out at all? Foreign flows seem to be heading towards the exit door. Are there any fundamental concerns, or is this just a re-rating after the Indian markets have run up one way so aggressively?
Yeah, I think that's right. I think the market has run up rather dramatically, and giving some time for the market to catch up, to kind of move sideways while earnings catch up, would be very helpful. So I don't know that there's anything that's wrong with India in terms of the economy, financial system, or the political situation. And I think with Trump, the relationship between the United States and India will remain a good one and probably strengthen. So I think a lot of this is just kind of market nervousness, people wanting to take some profits. Maybe they're actually moving into the United States because of the Trump trade. Maybe that's kind of like the big sucking sound is the U.S. sucking a lot of financial assets back into the country. But that seems to be occurring very, very rapidly. And I think the markets will, I think India will do just fine.
Thank you so much, Mr. Yardeni, for speaking with us. The Edward Yardeni, president of Yardeni Research, this morning, saying that happy days are here as far as global markets are concerned and U.S. markets are concerned, actually.